Welcome investors to the 40 Finance channel. Rumors are starting to swirl that NVIDIA is going to bail on their ARM acquisition. I think if you follow the market, most people have been sort of anticipating that this deal would be very unlikely to get done. It has to go across several international borders, including China, and with regulators chomping at the bit here in the US, it never really felt like it was going to be an easy win for NVIDIA. So that news to me isn't really much of a shock to NVIDIA stock. It is down about 4% as I'm recording this here today, but honestly, it looks like the NASDAQ is down 2.5%. I think the biggest concern for this particular stock has just been, all the swirl about overvaluation on this stock. So with these headlines swirling with the ARM deal, I thought I'd just take a minute and let's look at NVIDIA stock from valuation perspective and try to project, how much further it could fall in what many say, rate tightening environment, inflation, all the things. All right, let's take a look here on SeekingAlpha. NVIDIA today, 223.18 as of 11:30 today. And here's your one-year chart. It's up 70% over the past year. Started last year at 136. You reached a peak of approximately 333, and now you've settled down minus $100 from there. And you look off to the side here, you've got forward EPS of 433, a forward PE of 53.92. You do get a small dividend, 0.07% on today's price. Now, the largest critique of NVIDIA is going to lie in that PE and price to sales range as it compares to competitors AMD and even Intel. So to put that in perspective, I created this comparison here. Even threw TSM in since they actually make some of NVIDIA's chips. Now, if you like the way this comparison table is set up, check out SeekingAlpha. My affiliate link is in the description. It gives you a significant discount on a one-year subscription. If you've been watching the channel, you know I've been digging in deep on SeekingAlpha lately. Great website, particularly for stock research. All right, I'm just going to skip down to the valuation ratios here to give you an idea what I was talking about. We'll go through very quickly. PE non-GAAP fiscal year 1. NVIDIA, this is a forward metric, 53.92. AMD at 44. Intel at 10. TSM at 23. And even if you extrapolate out to a projection on the 3-year horizon, you've got NVIDIA still running higher, 38 to 28 on AMD to 13 at Intel, 16 for TSM. Now that's non-GAAP, which NVIDIA typically reports in. If you want to look at GAAP, you're at 64 versus AMD's 47 versus Intel coming in under 12. So at least from a PE ratio or, earnings ratio per share, you can see why there's many people who say NVIDIA has a lot more room to run down. But let's take another view in terms of price to sales. This is a trailing metric, but NVIDIA 24x, AMD under 10, Intel running about 3, and TSM just above 10. Compare that with enterprise value over sales, forward looking, NVIDIA 22, AMD, Intel, you get the picture. And even if you want to come down here on price to cash flow on a trailing view, you've got 71 versus 43 versus 6 versus 17. Any way you stack it on these metrics, NVIDIA is certainly much more expensive than AMD, for example. Now, the counter argument to the PE, price to sales, all those things discussion could be that their multiple is warranted because they're growing so much faster than their peers. So let's take a look at that. Revenue growth year over year, NVIDIA 64%, AMD 71%. And without even going down the list, I know that Intel and TSM are not even going to hang in this category. So let's just focus on AMD. Revenue growth going forward, 42% for NVIDIA, 42% basically for AMD. 3-year CAGR. Now you've got AMD taking the lead plus 32%. 5-year looks like NVIDIA could retake the lead, so to speak. However, AMD not very far behind at 29%. EBITDA growth going forward just this 1 year, 59% versus 67%. EPS growth, 111% versus 339%, and that's year over year. Let's look forward, plus 53% to plus 73%. I would infer that NVIDIA is trading much, much higher, and perhaps that's not warranted. However, you could argue that AMD, in their single digits on most of those scores, maybe AMD should be trading higher than they are today, and perhaps there's some middle ground where NVIDIA comes down, AMD goes up. That's the great guessing game of the market, and everybody has their own valuation. Now, in terms of my valuation, if you watch the channel, you know that typically I like to look back into historical valuation multiples and try to cherry pick just what I think the stock could trade at, up or down, from what we see today. Now, we know that we're seeing the market melt down a little bit. A lot of people would agree that is because valuation multiples are contracting, right? They're at historic highs across many, many, many stocks, and now we're starting to see that come down. So let's try to figure out what NVIDIA's multiple could be if we look back in time a little bit. And I just did a video on this where I sort of identified periods of rising interest rates. And the short version of that video is that 2015 through 2019 represents a good time period to compare with rising interest rates, okay? So if we take that 5-year stretch for NVIDIA, and you see you have a lot of different scores here. I put these all together and just ran a simple average, and the average was 27. I'm going to round that up to 30 just because I think that their growth rate warrants a bump up from the historical average. But it's only 3 points here, right? You can see right before the pandemic, they were at 33. So I'm going to say 30 with inflationary pressures pushing down on the market. All right, next thing I want to do real quick is just get a feel for how well NVIDIA has performed versus expectations in earnings. And the fact of the matter is they've done very, very well over really since 2018. So these blue bars are what NVIDIA reported, and the black bars were the analyst consensus at the time. And it doesn't take a genius to figure out that they pretty much outperformed across the board, including here recently the last 3 earnings presentations from 2021. You were plus, almost 6%, plus 2%, and plus 11.5%. So with that in mind, and assuming they beat again, I'm going to go overboard here and give NVIDIA a plus 10% expectation over analyst estimates for the next fiscal year. Okay, so let's see what we have in terms of EPS expectations for this company. All right. The report that they have coming up in late February, the estimate is 4.33 for the whole fiscal year, not just for that quarter, for the whole fiscal year. I think if we go by past track record, you probably can add 6 to 10 cents to this number is probably where they'll land since they always seem to outperform. Now it gets harder though, because I'm most interested in the guidance for 2023. Like most people are. And I'm not going to make this too complicated. You got 39 analysts, consensus of 519. The range is $4.62 to $6. If we padded this by 10%, it would bring us approximately up to $5.70. So I'm going to say $5.70 for the forward EPS fiscal year 2023. Now remember back when we were looking at historical forward PEs, right? I landed on 30, valuation multiple of 30. So 30x $5.70 gives you a price of $171. That is, give or take $50 more down from here if my projections were to hold true. Now, what if we look ahead and we're going to say, hey, I'm not selling NVIDIA this year. I want to hold it for multiple years. When do I get my money back in that type of environment? And if we did the same thing, and we'll give them a major benefit of the doubt and just round this up to $7, you know, $7 in 2024 times 30 is obviously 210. Now, lately in this environment, because it's so choppy, I've been saying, you know, assign yourself a plus or minus 10% to these numbers, right? So if I was at 171 and you were going to go plus 10% of 171, you would add $17. That would get you up to 188. So in my opinion, you could start thinking about buying NVIDIA in the 188 range, knowing, of course, that it could fall as far as the minus 10% part of that, which would be 154. The most important thing, though, that I see in these prices with NVIDIA right now is just there's so much more risk to the downside. So if you're interested in buying into NVIDIA because you've seen the price go down $100 or so, just know that right now that $100 is fairly irrelevant to the so-called fair value of the stock. It, like so many others, it had just become a darling, and there's not a ton of fundamentals to support it. Now, could go on another momentum run. They could also turn around at this earnings call and announce something like a stock share buyback. Now that they're not going to be blowing money on the ARM deal, they could also announce another acquisition. So there's a lot of things that can push the momentum for NVIDIA. And momentum is really where this stock has performed well. But momentum can blow away quickly, as we're all starting to find out. So if you want to play cautiously, I would stick to 170 or so to get in this one, and then hope that NVIDIA continues to outperform in the future. All right, guys, that's my take on NVIDIA stock as of January 25th and the information that we have today. Hope you enjoyed it. As always, please like the video, share with your friends. Don't forget that special offer on Seeking Alpha in the description. We will see you on the next video.